Dear online participants, welcome to this very special edition of the European Microfinance Week. My name is Guy Benzeno, and I will be your guide to today's online content and to the various proceedings. I'm here at the Abbaye de Neumünster, which many of you are familiar with in the old quarters of Luxembourg City. And you, dear audience, are connecting from all over Europe and indeed from all over the world. The organizers of this year's edition wanted to hold this year's event in the most responsible way, having regard for everyone's safety and respecting social distancing directives, which was an opportunity to show resilience and creativity in the face of adversity, practicing some of what will be preached in today's sessions. We are excited to be able to share with you this year's program, and we are most grateful for your participation, without which this event could not be a success. So on behalf of the organizing team, thank you. And speaking of the organizing team, it is my privilege to introduce you Christoph Pausch, Executive Secretary of the European Microfinance Platform, for a word of welcome.
Welcome to the European Microfinance Week 2020. I'm sure those of you familiar with European Microfinance Week have already recognized my surroundings. Yes, I'm here in Luxembourg at the Abbaye de Neumünster, the traditional warm location of our wonderful event. More precisely, I'm in the former chapel, which for me is the most beautiful room of the Abbey. There is no doubt about it, but 2020 will go down in history as the year of COVID-19. And after all what already happened in the last month, I'm sure that e-MFP's decision to organize this year's European Microfinance Week online, and unfortunately not in this beautiful location, did not come as a surprise to you. Throughout our planning, one thing has always been very clear for us. Now, more than ever, it's vital to connect and gather together the inclusive finance world to find solutions to the most pressing issues of the sector. Going online, of course, may mean losing some personal touch, some personal experience. But on the other hand, we at e-MFP also see it as an opportunity to reach out to new people all over the world, in Africa, in Asia, or in Latin America, who in the past may not have been able to join us here in person. And I would like to say a very special and warm welcome to all those of you who join us for the very first time. We are very glad to have you with us in this most special of years. As well as reaching out to new participants, going online also gives us more freedom to have a wider range of session formats. And in the next days, we will have big plenaries, traditional panel discussions, but also fireside chats, keynotes, topic launches, case studies, working sessions, and launches of brand new publications. In total, there will be close to 50 events in the program of this Microfinance Week, more than ever before. Besides the European Microfinance Award ceremony, another absolute highlight that I really recommend you is the launch of Taking Shelter, the new book, and I would even say reference book, on housing microfinance, which will be presented later today. From the feedback we receive each year from our participants, we know what participants value most about the Microfinance Week. This is networking and reaching out to peers, exchanging information and knowledge, planning new projects and collaborations, learning from each other. And we at e-MFP are confident that you can experience all these usual great elements at this year's European Microfinance Week. We are offering an engaging, dynamic, and interactive event. So dive right in and make the most of this, our first virtual European Microfinance Week. I would like to say thank you to our main funders, the Luxembourg Ministry of Foreign and European Affairs Directorate for Development Cooperation, and the Luxembourg Ministry of Finance for their support. And I would like to thank the European Microfinance Week sponsors, our corporate sponsors, Credit Suisse and the European Investment Bank, as well as our contributing sponsors, Arendt, Infine.lu, Bio, Frankfurt School of Finance and Management, and ADA. A big thank you goes also to our media partners, Microcapital, FinDev Gateway, and Next Billion, for spreading the word. I say spreading the word, and we know many of you are very active on social media. So please don't forget to use the hashtag EMW2020 when posting about the event. I already mentioned the excellent cooperation that we have with the Luxembourg Ministry of Foreign and European Affairs, Directorate for Development Cooperation, and I'm extremely happy that its General Coordinator, Mr. Christoph Schiltz, has accepted our invitation to give the opening remarks of this conference. I wish you a great European Microfinance Week 2020, and I'm looking forward to meeting you again in person next year here in Luxembourg. In the meantime, stay safe and take care of yourself and of your loved ones.
Good afternoon, ladies and gentlemen. On behalf of the Government of Luxembourg, it is my great pleasure to welcome you to the European Microfinance Week. We would, of course, have preferred to organise this yearly event at the Neumünster Abbey at the centre of Luxembourg City. However, this year is different in many ways. Nevertheless, we are pleased that so many experts and eminent speakers with a diversity of backgrounds and origins, all sharing our common goals of promoting financial inclusion, are with us today and this week to lead and participate in the discussions over the coming days. During the upcoming sessions, we will hear about exciting future-oriented topics and trends in financial inclusion, such as digitalization, housing, insurance, agricultural finance, impact measurement, climate change, savings, and last but definitely not least, COVID-19 and the crisis it has induced. This virus has in almost no time become a threat to human health, safety and well-being, and has caused a severe disruption to societies, economies, and it has had a devastating impact on lives and livelihoods, especially those of the poorest and most vulnerable parts of the population. In this context, it has become crucial to ensure resilience and to support productive activities, job creation and entrepreneurship, especially of women and young people, through access to inclusive financial and non-financial services. Luxembourg remains committed to supporting this effort through well-targeted public action, together with our European partners like the European Microfinance Platform, with the aim of ensuring that the financial inclusion sector remains resilient. We will continue to facilitate economic recovery efforts over the coming months and years. While the consequences of the current crisis are multifaceted, I would like to mention just a few on which the reflections will be deepened over the course of this week. The shift towards digital financial services was already advancing financial inclusion before the pandemic started. Nevertheless, the COVID-19 crisis has illustrated the vital role that truly responsible digital financial services can play for vulnerable population in the context of social distancing. Indeed, digital distribution channels can bridge geographic distances between microfinance institutions and hard-to-reach clients, enable contactless payments, and can be used to bypass other barriers to provide financial services or information. In the longer term, COVID-19 will undoubtedly accelerate the transition to digital finance, which has the potential to boost economic growth. Together with our partners like our fintech and cybersecurity communities, the Alliance for Financial Inclusion, which recently opened an office in Luxembourg, and yourselves, we want to tap the high potential of responsible digital financial services in the post-COVID era. In digital financial services and beyond, the COVID-19 pandemic is also highlighting the need for better consumer protection. Lockdowns have put financial service providers as well as consumers under stress. In order to be coherent with our shared do no harm principle, the whole sector needs to work together to treat consumers fairly and avoid bad behavior that adds to the suffering, and at the same time avoid putting excessive stress on financial service providers. Over the past month, we have witnessed unprecedented coordination among investors, donors, and other industry players who all seek to support clients and the institutions that serve them. Together with its partners, the European Microfinance Platform has launched a discussion platform, covid-fininclusion.org. Our partner, ADA, is coordinating technical assistance provision and has created an emergency technical assistance fund to help MFIs weather the crisis. Furthermore, the microfinance investment vehicles, of which a majority are domiciled in Luxembourg, have jointly elaborated key rules and principles to harmonize their approaches and protect microfinance institutions and their clients in the COVID-19 crisis. They did so together with some of our partner organizations, such as CGAP, SPTF, or the Grameen Crédit Agricole Foundation. We see this as a good practice, and I would like to encourage you all to pursue such customer-centric approaches and to avoid exacerbating competition in these crucial times for the survival of the sector. As the 2020 Financial Inclusion Compass puts it, there are chances to make changes and to build back better that the gravitational pull of the status quo would never allow in normal times. We need to seek those opportunities. As every year, tomorrow's European Microfinance Award will represent one of the highlights of this week. Our minister was, of course, not aware of this year's context when choosing the topic of the 2020 award, which proves to be most relevant. Savings can be seen as a traditional European approach to financial services and have been critical in providing safety nets to millions of people who are at risk of falling into poverty. Individuals and enterprises without enough savings face financial pressure when economic activities are disrupted. Inclusive savings have allowed consumption smoothing in the face of income volatility, thereby minimizing the impact of the pandemic. Beyond this, they also encourage long-term planning and drive gender empowerment. As an example, worldwide, there are more than 15 million members in savings groups, which are overwhelmingly made up of poor rural women. They are a critical engine for economic opportunity and a source of social solidarity. Often, these are at the front lines of the local response to shocks, even before any public relief efforts are rolled out. Ladies and gentlemen, we look forward to a high-level and in-depth discussion of the financial inclusion community active in the developing world, and I'm confident that you will make the best out of this extraordinary meeting to share experiences with and learn from leading experts, opinion leaders, and policymakers. Please let me wish all of you fruitful discussions and a good European Microfinance Week. And we look forward to welcoming you again in person in Luxembourg for next year's edition. Thank you for your attention.
Our next segment for you in the program is a keynote speech by a very special guest, Ella Bhatt. Ella Bhatt is an Indian cooperative organizer, a veteran activist, and founder of the Self-Employed Women's Association of India, founded in 1972. She was invited to be part of the group of elders initiated by Nelson Mandela in 2007, a gathering of the world leaders contributing their wisdom, independent leadership, and integrity to tackle some of the world's toughest problems. We asked her to bring her unique perspective, having worked for decades in financial inclusion, in order to place the current COVID crisis in context. What does she anticipate will be the impact of this crisis on the microfinance sector, and how does that compare to previous crises? What should be the focus of the sector when navigating this crisis? What lessons from her experience are applicable to moving past this particular crisis? Can we discern opportunities for the future made possible by the dramatic changes currently taking place? All of that and more from Ella Bhatt.
Namaste, everybody. My greetings. Respected friends, thank you. I feel honored to be present and speak at the European Finance event. The event is virtual, fortunately, unfortunately. I sincerely thank the EFP and the Luxembourg government. Microfinance. Actually, the focus has been on the micro person, the person with micro status in our society. Let us not forget the person. That person is so often is she. Today, microfinance is understood as financial activity. But we know that microfinance has emerged from the development paradigm of poverty alleviation. Also, we do not forget that this need was specially articulated by women during the UN Conference of Women in Mexico City in 1975. And I was there, amongst all others. If I may say that I was there as, of course, one of them, but with some voice. As we, SEWA, that is Self-Employed Women's Association, a trade union of poor women, self-employed, we had some voice because we had already started running a cooperative bank called SEWA Bank. And that was already in 73. I would like to say that the word microfinance came much later, as microfinance arrived on the world stage at the Microcredit Summit in Washington, D.C. in 1997. The focus then turned to credit. Since then, it has been known as microcredit. So the focus turned to credit, also from savings to credit. Earlier, it was savings mainly. I thought that let me just tell you the background, since I may say that I've been there from the beginning. The word microfinance came much later, as I said. As microfinance arrived in the world stage at the Microcredit Summit in Washington, the focus turned to credit. Moreover, savings turned to credit. And soon, the world's investors were knocking at the door of MFIs, microfinance institutions. Needless to say that microcredit per se has severe limitations. Limitations in alleviating poverty, generating income, or building assets, or even I would say building a nurturing economy. Today, I would advocate a broader approach and urge the MFIs and investors to offer a whole set of financial services beyond microcredit. A combination of banking, savings, money transfers, loans, insurance, pensions. I would also include, say, micro-social impact funds. Also, green investment facilities. Why not? Such combined products would cater to various life cycle needs of the lower income households. They need support services as well. In SEWA Bank, as my colleague Jayshree Vyas says, that often we support our women clients with healthcare, with agricultural extension, veterinary services, skill training, even market linkages as well. I have also seen other MFIs like Basics in India are using a even broader livelihood approach. Let me say that such approach has largely cut down the forced migration of men from their own land and own home. Uh, During the pandemic, as you know, the massive forced migration has become India's most tragic history. Never before so many honest and hardworking people had to so suddenly walk away from their work, jobs, from their due payments with empty pockets with money and walking on foot towards their home, their village, and meeting their own women and children, the family. So it has been very tragic. However, let me say that in these villages, where women had their self-help groups, their savings federations, livelihood funds, farm business facilities, they helped the families survive in this the most brutal and shameful shock to their life and livelihood and our society, our economy. I want to underline that the health and economic crisis arising out of COVID is a result of our own reckless ways and lack of concern for the environment. The humans have ravaged each other and the Mother Earth, the habitat of other living beings as well. It is painful to see that the huge, the huge finance was flowed to destruction. Even I would go to say self-destructing activities. I plead for financial services should be flowing to nurturing our daily life, that is mainly food and health, ensuring soil that nurtures the earth, that nurtures all living beings. The finance has to reach the human mind and nurtures the knowledge and suitable technology. We need nurturing investments that nurtures the next generation. But unfortunately, today it seems the financial system itself has become an independent structure, as if exists for its own sake, detached from subsistence, changing climates, detached from relationships, art and craft, uh, global, local well-being. Of course, we know that money is a useful tool, but today, money has become a tool to make more money and more. We have become a tool in the hands of the financial tools, right? The truth is, all tools must serve us, not the other way. The banking sector needs to think on its own whether to finance, invest in a biscuit factory or a gun factory, in more cars or more bicycles, more trees or more pesticides. The banks and MFIs required to think of the end use of the finance product they lend. Let us find ways to microfinance tree plantation more profitable. How do we make that? How do we make that more profitable than cutting down forests? Recycling more profitable than new manufacturing. These are the challenges that we have to deal with. Let us encourage community ownership of assets in addition to building private assets. Given a fair chance, the spirit of cooperation is just as likely to lead us to profits as a dose of healthy competition. The present microfinance banking sector needs to realize that low-income households need to enhance their incomes, not cash flow smoothing. Invest in skills, productive assets, in working capital. Hopefully, the regulators will help supporting innovative financial services. We hope for that. Lastly, about digital finance. It is an opportunity. Is it an opportunity or a threat on finance to the MFIs of today? Honestly, I do not know. I do not know, despite being a keynote speaker of this event. However, we had been practicing high touch involving many meetings, face-to-face contacts, filling in forms with hand, submitting them with hands. But this has changed also in SEWA Bank. So in recent years, it has been changing, and more so in recent months. In SEWA Bank, also changed. How can we find a middle path? That is the challenge. Service to clients to be face-to-face and information, etc., digital. Services be face-to-face and all that information, etc., be digital. Is it possible? My friend, who is a researcher, Vijay Mahajan, calls it, he has given a name, calling it DigiTouch. DigiTouch. I understand digital finance products and services must be owned, managed, operated by women's finance organizations, local finance organization, then like cooperatives, federations, associations, self-help groups, and more. And nor do finance system. Digital finance must be localized, decentralized, and be in the service of also women who are engaged in economic activities. This is my humble understanding. At the end, I would like to say that the path to future is The path to future I would tread is that of nurturance. I mean, if someone had not nurtured us during our infancy, when we were infants, or when we were child, we would not have been here. This is the lesson of nurturance. So this is the lesson I have learned from pandemic. When shall we realize that? What bothers me, I think is the right word, or to be more serious than bother. But the problem, it seems that we don't realize. When shall we realize that together we form the world? We together. Our relationships nourish us all. You and me and people and the nature. We are under one sky. We breathe a common air. We draw water from a common ground. We eat the produce of the same earth that sustains all living beings. Let us acknowledge this bond between us and walk the path building an economy of nurturance. With these words, I thank you again and wish you the best.
And so I'm back. I hope you enjoyed that keynote speech. Our next segment is going to be a panel discussion. It's going to be an engaging and dynamic conversation among leading observers from across different parts of our sector. They will be considering the events of the past few months during this COVID crisis. They will try to tell us what they believe is the real position of FSPs today. Just how resilient have different financial institutions proven to be? And what support will they need next year, and from whom? For them to keep their doors open and serve their clients, they're going to need to be resilient.
Hi, everyone. Welcome. After this incredible keynote speech, it's going to be a very dramatic shift from talking about this incredibly human issue to more institutional issues, but bear with us as we make that transition. Today we have an amazing panel. We have Greta Bull, who's the CEO of CGAP at the World Bank. We have Eric Campos, who is Délégué Général at Grameen Agricole. Sanjay Sinha, the Managing Director of M-CRIL in India. Mohammed Khaled, who is the Group Lead of the Microfinance Practice for MENA at the IFC. And what we'll do is have each of them give sort of their broad overview on this topic of institutional resilience and kind of what's happening right now. And we'll get into a few more questions that will project us forward a little bit more after that, and then leave a little bit of time at the end for Q&A. So please feel free to add your questions in the chat. My name is Barbara Magnoni. I didn't introduce myself. I'm president of VA Consultants, and I am honored to present this panel and help you get through the morning with them. Thank you. We'll start with Greta.
Good morning, everybody. And it's very early morning where I am, so hopefully I will manage to make sense. So let me walk you through what CGAP is seeing. So CGAP, since the crisis began, has mobilized to try to provide some support to the microfinance sector. Partly that's been about gathering data on what's happening in the portfolios of MFIs, but also trying to put some resources together on risk management, scenario planning, dealing with lawyers, all of the things that MFIs are grappling with right now. And so those resources can all be found on our website, which is cgap.org. Today, I'm going to talk mostly about the pulse surveys. We've been running a series of pulse surveys since April, and we opened up the very last wave of our pulse surveys yesterday. So if there are any MFIs listening in, please do take a moment to submit your data. It's been very useful. We will be carrying forward this data work, not doing our own pulse surveys, but we formed a partnership with Symbiotics, drawing on data from their 320 or so investees. And our first publication on that data set came out yesterday. Again, it's on our website. But what I thought I'd do is just walk you through some of the headlines of what we're seeing across both data sets. And I think this is largely consistent with what others are seeing. First of all, the liquidity crisis that many predicted and feared at the outset of this crisis has not materialized, mostly thanks to actions taken by governments, investors, and the MFIs themselves. That said, as we come into the second big phase of this crisis, there's a lot of uncertainty around the financials. And a lot of that uncertainty has to do with the initial response to the crisis. So many governments put in place moratoria. And in our sample, about 2 out of 3 MFIs had passed some degree of forbearance onto their clients. What this led to was a lot of restructurings in loan portfolios. And consequently, it's actually quite difficult to understand what's really going on in terms of par. So one concern is that once those moratoria start getting lifted, we may have clearer signals about borrowers' ability to pay, but it may not be in a positive direction. One of the other things MFIs did in the early stages of the crisis to preserve liquidity and manage risk was to cut back lending significantly. So 3 out of 4 of the MFIs that we surveyed reported cutting lending, typically to less than half of normal levels, and some of them even cut it entirely. And that all took place in the initial stages of the crisis. Now, looking at the data we have from Symbiotics, we are seeing lending volumes and repayments recovering, but they're generally settling in at about 10 to 20% below what the norm would be. In our sample, we also saw par double very quickly initially, and then it's recovered somewhat. But what we are seeing is that as moratoria are being lifted, we expect that there will be some impact on portfolio quality, and we're seeing very early signs of that in the data. So with par up and revenue reduced, the main concern that we have in the medium term is one of solvency, particularly for smaller tier 2 and tier 3 MFIs. But until we lift that moratorium veil, it is going to be difficult to know exactly what the situation is. We did take the temperature of the MFIs that we surveyed in July, and so we asked a qualitative question to them about whether they were concerned about liquidity and solvency in the coming months. 29% of MFIs said that they anticipated liquidity issues in the next 3 months, which largely tallied with the financial data that we'd gathered in the first wave of the survey. More concerningly, we saw that about 1 in 3 MFIs said they expected solvency issues in the next 6 months. So there are a lot of unknowns in the financial data, but we do know that the industry is really concerned. Just really quickly, from an operational point of view, we are seeing a lot of institutions shifting to digital means of interacting with customers as social distancing became the norm. That said, the main thing they did was to expand call center operations. Over a third of our sample did that. But there is a deeper push into digital going on, with around 30% of respondents saying they were expanding existing digital channels and or adopting new ones. But it has to be noted that this is from a pretty low base. So only 40% of the MFIs we surveyed said that they're doing at least some transactions over digital channels, which is good, but very few have significant values running over those digital rails, even in this crisis situation. A quarter aren't doing any digital transactions at all, and a third of the MFIs that we surveyed didn't respond on this question. So I think the crisis has served as a wake-up call to many MFIs that they do need to work on institutional resilience in many forms, just being able to anticipate risk, measure what's going on in the organization, do scenario planning, organize to negotiate with lenders, et cetera. But embracing digitization is among the things that we see that they're doing. We're just, I think, a pretty long way from seeing this be a reality in the sector. So back to you, Barbara.
Great. Thanks so much, Greta. So as we move ahead, Eric is going to share a similar type of survey, longitudinal over the course of the COVID crisis of a number of MFIs. Thanks, Eric.
Yes, thank you, Barbara. Do you hear me well?
Perfect.
Okay, perfect. So I have some figures to show. I don't know if we can have them in the screen. Okay, this is perfect. So first of all, I would like to give you some, let's say, to put you in context the figures that I want to show. First of all, when the COVID-19 appeared, it was in February. The main fear that we had at that time was to avoid the liquidity crisis. For us, the context was quite difficult, and we anticipated at this time a kind of, sense of panic coming from the lenders, and we wanted absolutely to avoid it. So we decided to launch immediately a survey. It was in the last days of February. And then on a regular basis, we launched a survey in March, in April, in May, in June. And I'm going to show you some figures. And I have to tell you that thanks to the MFI answers and the cooperation with ADA and Impulse, we have gathered figures coming from 100 and more than 100 MFIs, very interesting, based on the 3 continents, Asia, Africa, and South Africa. And then, on the regular basis, we sent back to the MFIs the analysis from the figures to allow them to see in which position and what were the problem of the others MFIs, just to relax them on the fact that everyone was on the same context, and it was also a good way to take some tips. So this was the way we experienced the survey. So first figure is interesting. If you can. Put the next slide, please. Yes, is the fact that we can say that there was no major liquidity crisis for MFIs, thanks to no massive run of deposits, rollover provided by lenders, and cautious disbursement by MFIs. You know, you have the percentage of lack of liquidity on the sample of MFIs. That is a representative samples anyway. So there was, in the beginning of the survey, 40%, around 40% facing liquidity difficulties, lack of liquidity, and the figures were decreasing to 12% at the last survey. And as you can see, there is no withdrawal of savings during the period of crisis 19. So what we can see is that MFIs have maintained an adequate liquidity buffer with a limited number of MFIs experiencing low level of liquidity. We have, let's say, 70 partners at the foundation level, in the portfolio of the foundation. So there is a rare cases of low level of liquidity. So this is the first, I would say, finding that there were no liquidity crisis during the COVID-19. I'm sure that the fact that we have all signed pledge or MOU trying to protect the MFIs from this kind of liquidity effect was, in any case, a very good decisions that altogether we took. Next slide, please. This is the duration of the rollover. To tell you the truth, I was more convinced on the, let's say, more duration on the rollover. For us, it was no 6-month crisis. It's probably a 1 year or 2 years crisis. But we have to admit that the rollover was on average a 6-month rollover, and we have some cases on 12 and 24 month rollover. I'm sure that we will see the second wave of rollover, and I can bet on the fact that the average will be at 1 year duration at least. So, but in the first let's say, wave of rollover, we have assist on a 6-month average. Next, please. This is the level of risk. This shows exactly what we have seen. You know, first big wave in March of increase of portfolio at risk. You can see the pink wave increasing at, let's say, all in all, less than 50%, was 32% of weighted average of COVID, 32%. This is the effect. And what we can notice on between, let's say, March to August, the last figures went to August, is the fact that the risk is still there. So the pink is at 21%. This is the level of average of COVID moratorium. This is the bulk of COVID risk. It's 21% of the portfolio. This means that if, as of today, we didn't see any big crisis, but we have still a risk pending in the portfolio of the MFIs. 7 to 8 months later, the beginning of the crisis, the risk is still there. This is the reason why I said that the average rollover should be above 12 plus duration at least. Next, please. Interesting, this cheese represents the kind of recovery trend. The green is the customer. The question was to see the level of, the number of clients, the percentage of clients that have resumed their activity. 35% said we have more than 90% of our customers that have resumed their activity. This means that 25%, the third part of the portfolio, of the sample, let's say the third part of the sample, becomes, let's say, more or less in the same path of before the COVID crisis. 54% said between 50 to 19% of our customers have resumed their activity. They are in the middle of the river, and the risk is at 11%. Said that between 20 to 50% of their customers have resumed their activity. This means that 35% are out of the risk, 54%, 35% out of the risk, 54% are, let's say, in the middle of the risk. They are improving, but still in the difficulties. And 11% is the part of maybe the risk is quite high. Next, please. Okay, this is a kind of a positive trend. You have different bars. The dark is the September survey, and the lighter is the May survey. And we have put 3 main difficulties. Difficulties to collect loan repayment as usual, difficulty to disburse loan as usual, and reduced portfolio outstanding. So as you can see, on the 3 main difficulties, the figure shows a kind of positive recovery, starting from, let's say, more or less 80% hit by everything to 43% reducing the portfolio, 32% difficulty of repayment, and 22% difficulty to disburse loan as usual. This means that we are recovering the path before COVID progressively, but we are recovering the path. Next, please. Interesting. We can say that COVID is a kind of threshold for the MFIs. We have tried to answer. We have tried to tell to the MFIs whether they wanted to launch new product due to what they learned from COVID crisis. And interesting to notice that 56% of them said that they want to invest on agriculture sector. This sector was considered as a risk sector before COVID, and then is considered as a high potential sector, 56%. Of course, this was not surprising that 55% said that they want to develop digital products. And surprisingly, we have seen that 40% wants to invest in financial education programs. This is the three big, let's say, new potential of development for MFIs, and only 30% said, no way, COVID has no impact on the product, and we don't want to launch new product. Only, I would say, 30% has said that, and 70% of the MFIs wants to use the COVID as a learning path and to launch new product to the client. This was, I guess, the last slide of the figures that I wanted to share with you.
Thank you so much, Eric. That is fantastic, and I think really has a lot of synergy with some of the data that Greta has on both sides. We'll move over to a little bit more country analysis now with Sanjay.
Thank you, Barbara. You've heard so far from Greta of CGAP and Eric of Grameen Credit Agricole, based on surveys that they have undertaken. Our approach at M-CRIL has been a little bit different, and I hope it gives you a slightly different perspective. I'm not claiming any great originality in what we have found, but I think there is a little bit of difference. What we did was to use audited financial information of MFIs in 5 different Asian countries. These are countries that we know extremely well, but we matched the audited information with informal feedback from the industry in these 5 countries. And we think we have a very interesting perspective. So the way we look at this issue is not just in a short-term perspective, but also in a long-term one. And that's where my first slide becomes interesting. Yeah, so here, this really looks at the long-term perspective. Indian microfinance has tremendous experience of crises. The past 10 years, we've had first the AP crisis, then the demonetization crisis of 2016-17, and now the COVID crisis. So the AP crisis actually shows a similar pattern, but I didn't want to go too far back. So let's just look at the demonetization crisis and what happened then. You see a sudden jump of portfolio at risk for microfinance service providers from 0.3% to 8.2%. I'm talking about PAR 30 here, to 8.2%. And it took 2 years effectively to come down from that. Aggressive write-offs, substantial recovery drives, and all of that. But the point is that it took a substantial effort, and it took a significant amount of money on the part of MFIs, both in terms of operating costs and also in terms of the funds required for write-off. What we're seeing this time, at least for India, is a jump. We don't know yet. The rest of this slide is about projections. We don't know yet, but perhaps by March next year, the PAR will have climbed to 20% or even more. I sort of feel that it will be 3 times what it was under demonetization. So 20 or even 24% is where it could go. And the collection efficiency that we're seeing over the past 8 to 10 months indicates that these estimates of 20 to 24% are probably in the right range. So what we estimate based on the experience of the demonetization spike is that it will be 4 to 5 years to recover from that. And I personally suspect that it will never go down to the 1.1, 1.4% levels that MFIs were reporting over the past 2 years, but probably will go down to 3 or 4%. So the effects of this spike are going to be long-term, 4 years, 5 years. It's not just a matter of 6 months or 1 year. So if we can go to the next slide. Thank you. I'm not expecting you to read the whole slide. What I want to draw your attention to are some key factors of the balance sheets of financial service providers in each of the 5 countries. For India, we've taken it as a dual sector, small finance banks and Indian MFIs. Now, one of the aspects that you see is deposits as a proportion of overall funds. This figure is surprisingly high for Pakistan, 72%, 61% for Indian small finance banks, 51% in Cambodia, 47% in Nepal. What you might have expected, and here I must say that I personally expected quite significant withdrawals. But as Eric has also pointed out, that has not happened, and this has been a great benefit for the financial service providers. It's apparent that people are quite reluctant to withdraw their savings and thereby erode the security that they have with the FSPs. One more click, please. Yeah. The difference is that Indian MFIs have high levels of borrowings because they don't have deposits. But if you look at the next row, liquidity facility. No, sorry, I was still on the previous one. Yeah, the next row of the table, you can see that liquidity facilities have been provided, abundant liquidity facilities have been provided by the central bank in India, and because of that, either directly to small finance banks or indirectly through development banks. The short-term liquidity of financial service providers has been safeguarded. Similarly, Cambodia, Myanmar, Nepal. Cambodia and Myanmar, it's external investors and lenders who are active. In Nepal, the local commercial banking sector is highly liquid and highly invested in the microfinance service providers. So those problems have also been mitigated in the short term. The next slide, please. Yeah, the other aspect that's interesting here is the cash and bank deposits as a proportion of total assets. Traditionally, the past 20 years, we've said that microfinance institutions should hold low levels of cash because they don't need them and because you can earn better from lending money than keeping it in a bank. But as of March 2019, March 2020, these numbers are far higher than we expected. It's actually only the Nepal figure at 8.8%, which is at the sort of level that you might expect. So again, there are buffers that have safeguarded microfinance service providers in the short term. But let me remind you of what I said earlier, and also remind you of the dangers of short-term liquidity funding, which is that at some point that money will have to be returned. At some point it will have to be replaced. At what price will it be replaced? How will the MFIs cope when the periods of, and individual clients indeed, how will all of them cope when the periods of moratoria are over? We may not have seen the depths of the crisis yet. It's possible that the next 18 months, 2 years, while it will have, we will have given financial service providers time to mitigate the effects of the crisis, I think there are some interesting times to come. Thank you.
Wonderful, Sanjay. Thank you so much. And we'll get into sort of the outlook, looking forward a little bit more after the next presentation. Mohammed, would you like to go ahead?
Can you hear me now? Okay. Hi everybody. Maybe I'll be a bit more optimistic when it comes to MENA, and recognizing that we are still in the middle of this. Nobody can tell how this whole crisis will evolve, but so far I think, like all the other regions, when this crisis began, we sort of panicked and expected high risks, credit risk in the sector, liquidity issues, some solvency issues for some of the MFIs. 6, 7, 8 months in this, things are not as it was, but it's not as bad as what we expected. Portfolio at risk increased. I'm talking about communicating and getting the data of most of the leading MFIs in this region. Portfolio at risk went up if we look at the slide, but not as we expected. And when this crisis began, we thought it will jump to 10 to 20% on the average, but we've seen many MFIs manage to keep things under control. Even the postponing the payments from the regulators in a country like Jordan, it was only for 2 months. So we've seen several months after that, and how the sector is behaving. In a country like Egypt, because it wasn't for free, many of the clients who asked to postpone, they came back and they wanted to continue paying. In a country like Tunisia, where it wasn't for free, but it was on a discounted basis, we've seen more clients asking to postpone their payments, but it was only for 3 months. So also we had a chance to see how the sector is behaving after that. So it's not as bad as on the liquidity issues. Microfinance in MENA is mainly a microcredit sector. So the sector is mainly funded by local banks and DFIs, and again, we didn't notice any serious issues. Banks in Jordan continue to lend to MFIs. Egypt the same. In Tunisia, where there was a liquidity issue before, we are in discussions with all the sectors there, and things seems to be fine. MFIs are covered till June 21. Most of them secured their liquidity. Morocco. Now, this could be partially because as some colleagues said, that DFIs and governments did something. Though governments in this region, they talked a lot actually about helping the sector with the liquidity issue, but none of their activities yet took place. They are still in the making. Some funds in Morocco and in Tunisia, the governments talked about, but they didn't take place yet. But it also could be because this is a region of a crisis. It's so many MFIs went through a crisis or more, and they sort of came into this crisis prepared. Microfinance crisis in Morocco, 2008, the Arab Springs or the Arab Revolutions, or 2011, 2012. Many of those countries like Yemen, like Syria, like Iraq, like Palestine, they are still having wars and having, and the sector over the years managed to adapt and to learn how to deal with that and to move on. Lebanon, my third slide actually showing the main MFI in Lebanon, the largest MFI, which has 50% of the market. And we went back in the data a bit before the crisis. If we look, we see that the big hit was far before the COVID, So within the COVID, it's like the other MFIs in the region. Portfolio at risk went up a bit, not too much, and went back to where it was. So again, we are still in the middle of this. No one can tell where this will go. But so far things are not as bad as we expected. On the digital front, things didn't move, but we began to see more appetite of MFIs. I think everybody now is talking about the need to digitize themselves and more move into that direction. My last comment here is what we noticed is some that we need to be careful about the message we are sending about the sector, because we saw in some discussions with some lenders, with some DFIs, that they sort of began to see, oh, this is a very risky sector. It is risky already under COVID. It's too, more risky, and maybe we should be careful about lending to the sector, which would have the opposite results we expected from worrying, and I'm talking about the expected risk for the sector. I will leave it here. Thank you.
Thanks so much, Mohammed, and I look forward to kind of hearing a little bit more about this divergence in what you're seeing and what some of the others who've presented are seeing. Just to kind of sort of tie this into the topic of this panel, we're really thinking about resilience as an important issue. And last week or earlier this week, when we were talking about this, one of you made a comment that, the good MFIs are going to be okay. And I'm interested in sort of going a little bit deeper in terms of what you mean by the good MFIs, and to what extent that links to issues around resilience. Maybe Sanjay, you have a comment on that?
Sanjay, you are muted.
Oops.
Yeah, thank you, Barbara. Naturally, good MFIs are MFIs with good risk management systems, but that are applied in practice. I think all MFIs nowadays, partly because projects by IFC and other investors pay lip service to risk management, but many of them operate from 1 month to the next, if not from 1 week to the next. So it's all about good management, management emphasizing that risk management approaches are applied. That boards also take a role in this, but also I think one of the problems with the current crisis is that everybody has seen it, and I think it's now emphasized by the prospect of a vaccine, that it's a short-term crisis. I don't believe it's that. So whatever approach people take to risk management, it needs to be forward-looking. And as I said earlier, applied to the next 18, 24, maybe even longer periods than that.
Yeah. Mohammed, are you seeing something similar in terms of the definition of good MFI in your region, or do you have any other characteristics that you're honing in on? I think you're on mute.
Yeah, I think it's always the case. You know, I think again I was talking about the Arab Springs, and where before that the Morocco crisis, we lost one of the main players in Morocco, Zakura. And I think in every single case, the crisis was the trigger, not the driver for the collapse of an MFI. Those MFIs had some weak systems, internal control systems, corporate governance, whatever. So they have all of those issues, but in a mood of a growth, their issues were hidden. And then when the crisis come, it just covered what was already there. But good MFIs, and again, the definition of good MFIs is MFIs who, have the right systems, have right governance, right internal controls and risk management, etc. I don't know if I agree with. I don't know. I'm not very familiar with the Asian sector, but in MENA, I don't necessarily agree with Sanjay that they live month by month. I think we have some good players in this region who managed to wave serious crisis and to continue to grow and to serve their customers and to make some good return for their investors if they are for a profit, or to make some profit and to capitalize themselves if they are NGOs. We have some of the largest NGOs and microcredit NGOs in the world in MENA here. So I'm not sure if I would agree on that comment, but yeah, again, the crisis wasn't the reason in most of the cases, I would say.
Yeah.
Thank you.
Thanks, Mohammed. And Greta earlier alluded to this moratorium veil that is still covering some of the information that we need. And I think that, looking forward, one of the things all of you alluded to is risk management systems and how important they are, and how that might allow some protection from what we may be facing up ahead. It would be interesting to sort of get a comparison for all of you to maybe comment on different regions and talk about sort of the advances in risk management and whether you think that the sector as a whole is in a good place in terms of being prepared for this, or if there's some weaknesses underlying that you've identified. Maybe we'll start with Sanjay again.
I think everything I've said already indicates that while I don't think there's a short-term crisis looming, that MFIs, investors, lenders, central banks all need to think about the consequences of withdrawing the facilities that have been put in place in recent months, and take it to a much longer period, perhaps, than they have planned for so far. Incidentally, the issue of moratoria and whether or not people should pay interest, customers should pay interest during the period of the moratorium, is now become a legal issue and is pending before the Indian Supreme Court. So it's not a small matter.
Yeah. Mohammed, in your case, what do you think? Are your institutions prepared? Do they have the systems set up to manage this sufficiently?
I think it depends. I think they are, the ones I'm talking about, the ones we are in regular contact with them, which again, they are the largest one. They are the more structured and in the region, who are serving the largest market share. And I think the market in MENA is very concentrated. You look at Morocco, 12 MFIs, the 3 of them are serving 95% of the clients. You look at Egypt, they have something like 1,000 MFIs. 10-15 of them are serving 95% of the client. It's the same story wherever you go. And in some countries like Palestine and Lebanon, one MFI has 50%, 60% of the market. So I'm talking about those big ones.
Yeah.
I think they have good systems. They have and they are also, they have good experience, as I said. Many of the MFIs in this region, when the crisis began, in the previous crisis, they treated everybody the same. In this crisis, they were in contact with their clients, and immediately they began to classify these clients were not affected, these were partially affected, and then to have solutions based on how affected the client is, etc., which is we didn't see in the previous crisis. They came to the crisis with business continuity plan. Their systems are more advanced and more, so I think, and they are working very well on their liquidity, and they are trying to get whatever liquidity they can at this point, versus no, it's too expensive, and why we are not dispersing now enough. Let's not. Many of them focus their disbursement on repeated clients, and we noticed that if you look at the slide I showed, while the portfolio stayed almost the same or increased, the number of active borrowers has been decreasing, not significantly, but and when we looked closer, it's because they are focusing more on their existing clients than attracting new clients into their portfolio. So I think they are preparing themselves, but again, no one knows how hard this wave or the coming wave will hit. We are still in the middle of this. I live in Jordan, where we were doing very fine at the first few months of the crisis. When 5 people died, it was a big thing. Now 100 people die per day, and there is no lockdown. It's so how this will evolve, nobody knows. But I think some of our MFIs are better than local banks in their countries. They are, I think, more advanced with their systems, with than their banks, and yeah, we hope that if financial institutions will make it, those MFIs will make it in this crisis.
It's interesting. I like the idea of thinking about client retention as a risk management strategy, right? It's sort of an interesting spin. And something new. Greta, I don't know if, I know you are not in LAC, but you were close to LAC for a long time. If you want to comment on LAC or any other region, or what you're seeing in terms of risk management and kind of how advanced the sector is.
Yeah, well, we look at this from a global perspective. I mean, I know Africa and LAC probably better than other regions, but we sort of have been looking across this globally. I guess a couple of observations I would make. It's really hard to speak of the microfinance sector as one thing. There's a lot of variation. We have some very sophisticated players in the sector and a pretty large number of not very sophisticated ones. So it's really hard to generalize. What we have seen through the data that we've had coming through is that tier 2 and tier 3 organizations are definitely having more problems than tier 1 organizations. So I think you will see that having those good risk management systems in place is going to be a big differentiator in terms of outcomes of the crisis, right? But I think across the board, there's a challenge. Some of the more sophisticated MFIs in LAC, for example, they're banks. They know how to manage risk. They know how to develop more complex products, et cetera. But I think in a lot of places we have MFIs that don't have those risk management capabilities, and it comes from having fairly simple products that are replicable and also not very strong systems, particularly on the data side. Obviously the capability gets better as they evolve and have to manage more complex balance sheets, meeting regulatory requirements that come with taking deposits, right? But I think across the board, there's probably a need to the game on risk management. We saw, this isn't a representative sample, but like in the early stages of the crisis, we were contacted by a lot of MFIs who were trying to, deal with things like producing accurate, timely reports when everything was changing, everything was going under moratoria. They were restructuring multiple times. So like they really didn't know what was going on in the portfolio. But also things like stress testing, help on thinking about scenario planning, help on thinking about how to negotiate with lenders. So, I think there are a lot of skills that, some MFIs who haven't been through crisis before are really having to grapple with. And so that was one reason we tried to focus on getting some of those tools out to people. I think going forward and, given the frequency with which we're seeing some of these crises pop up, there is a need for MFIs to up their game on risk management. And I think, Sanjay spoke about this earlier, but both strong management capabilities, governance oversight that is effective, but also better data. MFIs have really struggled with data. And I think of all the things, we talk about digital transformation like it's one thing. It's a lot of different things. But in my view, data is absolutely the most important thing for MFIs to tackle, getting on top of your systems and what's going on in the portfolio. It makes you more efficient, it improves reporting, it improves risk management, but it also helps to understand clients better and design better products with improved terms. So I think there is something to be said in terms of digitization around building better data architectures, gathering and storing the data and building analytics capabilities. I think that should be a priority for all MFIs. I don't think anybody's come out of this necessarily looking completely strong, right?
Thanks,
so
Greta. That's fantastic, and I think kind of like segues really well into. I'm gonna actually take an audience question, and if we have time, I might close on try and close a little bit on a futuristic or positive note going forward. But a few of the questions in the audience had to do with gender, and it's interesting that didn't come up in any of your presentations, and that's probably why they were asked the questions. Both in terms of understanding sort of the client dynamic, but also in terms of, the role of MFIs led by women, where women are managing, and, there is some historical evidence that they may be better prepared for crisis, more defensive, stronger managers. So it'd be interesting to see if this is an issue that any of you have looked at or seen any interesting data on. And if not, we'll just jump to the next. Let's not make anything up. If you don't have the data, you don't have the data. But if you have something, it would be interesting.
I would hate to disappoint, but I haven't seen any necessarily improved performance on the part of women-led MFIs.
That might actually be very linked to what Greta was saying about women leading smaller MFIs, tier 2, tier 3, and kind of that link as well. So that could be a hypothesis. Mohammed, did you have a comment on that?
Yeah, actually, at least two of the MFIs with whom we are working, one in Egypt, one in Jordan, are women only, and the one in Jordan is the largest MFI in Jordan. It only serves women, and it's led by women. And the one in Egypt, it's among the largest 4 or 5 in Egypt also. It's the others. Many of them are managed by women. They are serving men and women. The majority are women. I think on the average in this region, it's 60-65% of the microfinance clients are women. But on the performance, we didn't see any difference. I think, as I said, because we are talking about the tier 1 here. When I talk about the sector, I'm talking about tier 1 serving the overwhelming majority of the market. We didn't notice any difference in the performance. I think both are doing their best to go through this crisis with their clients successfully.
Yeah, thanks, Mohammed. Greta or Eric, do you have any additional comments on that?
Yeah, I don't think we have the data to really make a conclusive comment on that. So
sounds good.
It would be nice to have the data, but I don't think we do.
Okay. So I may shift away from that line of questioning and just kind of wrap up. We're wrapping up now with a broader question, kind of remembering what Ella Bhatt said about this being about people, not about institutions. We've been focusing this conversation around institutions, but ultimately these institutions exist to serve, and we are going to have to see them driving recovery going forward, right? And that's kind of why we care about their resilience and their strength as institutions. Is it too soon to be optimistic and sort of start talking about recovery and how this sector can help move us forward, in your opinion? Maybe we can have a really quick round of comments. We only have a couple of minutes. So each of you, maybe a 1 minute thought on this.
What order would you like us to go in? Would you like me to start?
Thank you.
Yeah, so I think it is too soon to be completely optimistic. We're not out of the woods yet, right? So this crisis is unusual in that it's not a sort of sharp hit and then we sort of figure out how to recover from it. It's ongoing, right? And we're not in the driver's seat, the virus is. So I think, there's a lot we just don't know. I mean, we averted a serious liquidity crisis in the early stages of this. But frankly, I never thought liquidity was the biggest risk. I mean, we needed to get liquidity into the market. I understand that, to maintain, faith in the financial system. But for me, it's always been a question about solvency. So, I think we need to see what happens when those moratoria are raised. We'll probably see par ticking up. Is it something that the sector can absorb? Too soon to tell. So and to be honest, I'd love to be proven wrong on this. And microfinance does have a remarkable ability to bounce back from this kind of crisis, but I think it's too soon to let down our guard. So I think our view is we need to keep gathering data, keep an eye on it, make sure we're keeping the conversation going. And then I think looking forward, it really is about building more resilient institutions. And that is, upping risk management capabilities, upping sort of back office capabilities. More generally, we believe that digitizing is an important aspect of becoming more resilient. And there will be a lot of good learning out of this crisis. So I think the bigger issue and the bigger trend is the digital trend coming out the sector, right? And so I hope that this crisis will have forced a bit of a reckoning about the ways the business model needs to be changed in that direction, and that we won't fall back into complacency. I think business as usual is a very strong complacency driver in this industry. So I hope that the industry will come back ready to face the digital challenge a little bit better.
Fantastic. Sanjay, you're unmuted, so I'm going to go with you next. Is it too soon to be optimistic, in your opinion? Sanjay?
Oh, was that for me? Sorry. No. I think Greta has summed it up very well. I don't have much to add to what she has said. I agree with everything that she said, except just to emphasize that I think the digital challenge is perhaps a larger one than many people realize. It's seen too much as the next panacea. I think we need to guard against that and build on our strengths, but do it with the knowledge that there are many poor people for whom smartphones are still a black box, and if we are to reach them, going digital may not necessarily be the answer in the short term.
Yeah.
Digital literacy, financial literacy, all of that is very important. A lot of work is being done, but a huge amount of work remains to be done.
Perhaps that's what we'll hear in our next crisis, how well we improved on your digital weaknesses. Mohammed, you're the optimist in the room, so maybe we close with you.
Yeah. No, actually, is it about people or about institutions? I think that's a very important issue, because that can be an explosive issue also. And I remember back in March, April, some discussions in some countries here, because it can become a political issue. The regulator, the government want to show that, they are pro the poor people, etc. And postpone your payments for 6 months with no cost to the client, which is very good to the customers who are, they are suffering, etc. But at the same time, you have to keep your staff. You cannot, you have to keep paying salaries for you, so for those MFIs, they became in a situation where, and in Egypt, then there was another version where no, it's with cost. You can keep charging the interest rate, but you cannot charge extra cost for both. In Tunisia, they reached a compromise that you can charge them the cost of fund, which was agreed to be 11%, but you cannot charge them the full cost, and they brought it down from 6 months to 3 months. I'm saying that because at the end of the day, these institutions, the assumption is they were built to serve people, and a huge investment was put from everybody on those institutions, and letting those institutions collapsing also, it will not be in the interest of the ultimate customers and the ultimate people we are here to serve. And I think that's an issue where it's it has to be handled in a more delicate way, if this round will come back again for discussion.
Super. Thank you, Mohammed. Unfortunately, Eric's connection fell, so we aren't able to have him close with his comments on optimism, but it sounds to me that there is very cautious optimism still. There's still a lot to do, and that we've learned from this crisis and past crises that, each one kind of hits us with some new surprises, and we have to continue to evolve and be prepared as we go. Thank you all for your participation in this panel. It's been great talking to you, and enjoy the rest of the event.
Thank you, Barbara.
Thank you.
Thanks, everybody.
Thank you, Barbara.
Bye.
Bye-bye.
Nous n'avons pas d'électricité au niveau du village même, qui fait que nous ne pouvons pas, le lait étant une denrée très périssable, cela pousse à ce que nous ne pouvons pas conserver notre lait.
CAFO qui a facilité des crédits pour nous. Parce que c'est le CAFO qui a bien habité à côté de nous là. Il nous connaît, on a connaît au CAFO aussi. On travaille ensemble. CAFO là, il ne demande pas notre banque qui demande. Il demande seulement des responsabilités et les confiances.
L'un des défis aujourd'hui auxquels nous sommes confrontés, le pays, le Mali de façon générale est confronté, c'est l'exode. Et puis il y a l'exode vraiment des zones de campagne vers la ville, mais il y a l'exode également du Mali vers l'étranger. Et aujourd'hui, les jeunes, ils partent pour quelque chose, pour aller chercher quelque chose. Aujourd'hui, si nous créons des conditions, nous créons de l'emploi pour ces jeunes, afin qu'ils puissent rester dans leur zone, je pense que ça va être une très bonne chose. Et c'est un défi pour CAFO du Guinée aujourd'hui, de pouvoir dénicher, de pouvoir créer, faire des financements adaptés à ces jeunes afin qu'ils puissent rester dans leur zone et éviter les zones rurales où on assiste tout le temps à des pertes de vie humaines assez élevées.
Moi, j'ai 2 femmes, 7 garçons. Donc, tous sont des étudiants. Il y a mon seul garçon qui a terminé l'université, qui travaille aussi dans le domaine de l'agriculture. Il est dans le domaine des semences. Et les autres sont encore à l'université. Mais ils travaillent les week-ends et les vacances. Ils travaillent tous à la ferme ici. Donc, tous ont un devoir de pouvoir essayer une production. Et tous ont déjà des comptes au niveau de la caisse CAFO du Guinée. Ils sont carrément dans la dynamique d'être autonomes dès qu'ils seront en activité. Et ils veulent aussi travailler dans le domaine de l'agriculture. Chacun a des moutons ou des chèvres que vous voyez un peu crier. Et à la longue, c'est eux que nous espérons sur eux pour qu'ils puissent prendre la relève. Mais il faut que cette relève-là soit réellement préparée.
Aujourd'hui, le défi que CAFO Guinée a, c'est que nous sommes vraiment à un pourcentage élevé dans le financement du monde rural. Et il faudra avoir des ressources adaptées à ce monde rural. Et aujourd'hui, un crédit qui va aller sur 7 ans, je pense que ça va nous permettre vraiment de pouvoir élargir d'abord notre gamme de produits, mais de dénicher encore d'autres couches pour pouvoir vraiment créer un peu de l'emploi au niveau de ces zones rurales. Donc c'est vraiment important, non seulement pour le Mali, important pour l'Afrique et important pour le monde entier, le monde tout entier.